Well, here with us is Oliver Sloup, Blue Line Futures. Let's ask him. Oliver, there's really, it's pretty quiet over here in the corn market here anyway today. Is there anything to move this market?
You know, it is really quiet, and although there's not a lot of movement, I'm sure there's a lot of people out there breathing a sigh of relief because there has been a lot of pressure on prices here over the past couple of months. And I think we're starting to get to the point where we are just kind of exhausting the selling pressure. Now, does that mean that we're going to rip higher in this market? No, but I don't see a whole lot of value selling right here, right now, especially with the USDA report here in the next week. I think that could be pivotal, and you could potentially see some position squaring from the funds going into that.
All right. Do you, what's your thoughts here ahead of that USDA report? Do you think that the worst of what could be expected in that report is already built into this market, or do you think that there is an outside chance that there could be more bad news that even take us even below this?
Well, the overall sentiment in the grain complex is pretty bearish, as bearish as I can remember. And usually when everybody is thinking the same thing at the same time, that generally means that it's largely priced into the market. Now, it could certainly go lower, but again, it's largely priced into the market. So I don't see a whole heck of a lot of value in selling right here, right now for this new crop contract, especially, as I had mentioned, ahead of that USDA report. If you're looking for more of an optimistic viewpoint, I think you got to look over to the soybeans. We've had great flash sales over the past couple of weeks. The prospects of a bigger crop has certainly put a lid and or diminish some of that enthusiasm. But I still think that if you want to look to the upside in these grain markets, beans is where you get the best risk reward and the best potential to the upside going into that USDA report.
And that bean market is just about as quiet. The August and the September are both unchanged, just like the corn. The November, the January, the March are all higher by 3/4 to 1 1/4 cent. So it's pretty quiet over there. What's not quiet is the wheat market. Chicago for December is down 6 1/4. The new crop July down 5 cents. Oliver, there's a lot of pressure over here in this wheat complex all the way across the board. July KC wheat down 5 1/2, and Minneapolis wheat on the July is even down 3 3/4 cents. Your thoughts?
Well, we've been pretty bearish on the wheat market for a while now. Anytime you get wheat in the mid $5, it's historically a time to look to the sell side. And now we're pulling back towards that psychologically and technically significant $5 handle. $5 was previous support all the way back in March and May at the eventual breakdown point in June. And then you recall early in the month of July, we broke out with some strong conviction above that $5 handle. So we're retracing that breakdown point. $5 will be a big line in the sand going forward. If the bulls fail to defend that going forward, I wouldn't be surprised to see a retest of the contract lows down at 471. And the U.S. dollar is something we're keeping a close eye on, too. Been under a lot of pressure recently. If we get a relief rally in the U.S. dollar, close below $5 in this September wheat contract, that could accelerate the selling pressure.